presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You are watching the Tom O'Brien Show. I hope you all had an okay weekend. We have a lot to look forward to in this market. The earnings are out of this world. Of course, we had On Semiconductor come out. You have Ford coming out today. We have Alphabet, Visa, AMD, Advanced Money Destroyer. Let's see what's going on with AMD right now. You had some good news coming out of NVIDIA. You had some okay news coming out of TSMC. Talk a little bit about that. AMD is kind of up pre-market right now. Or excuse me, pre-earnings. Trading at 159, up 1.82. That is coming out tomorrow. Let's see, you have Pfizer's, you have McDonald's. Of course, McDonald's infected a bunch of people with E. coli. So we'll see how that goes. They did end up bringing that double quarter pounder back to the region that had the onions that was infected with E. coli. And so we'll see how that affects them. Probably, I would reckon, really not too much. You have Pfizer, HSBC, good Lord, Chubb, Anheuser-Busch, Mondelez. This is a lot. This is a massive week. Spotify coming out tomorrow. EA is coming out. EA, I think, is probably going to get hit pretty hard, right? Let's see, off about 0.71%. Well, EA's been doing okay recently. Waiting for Ubisoft. I think they're coming out sometime next month. But they're going to get kind of squashed as well. I do feel that probably the video game company, at least, that's going to have the best quarterlies. You should look for this. Is going to be Activision Blizzard. They've been doing very well with World of Warcraft. They brought it back to China, of course, and this ramp up occurring is going to be reflected in some of their earnings for the past month. EA has not really been doing too much. Of course, a lot of their games still have the online marketplace, which I'm sure is a massive revenue driver, and they're not as bad off as something like Ubisoft is currently. You have First Solar tomorrow. And let's see, Microsoft on Wednesday, Caterpillar, AbbVie, Eli Lilly, Meta Platforms, Starbucks. This is the day, this is the week to get your options in, folks. Good Lord. MicroStrategy, Allstate, Coinbase. And then what I'm really curious about is on November 4th, you're going to have, this is going to be next Monday, you're going to have Palantir releasing earnings. Now, I took profits just earlier today in my Palantir. You asked me why. I'm still bullish on the company, right? You have a gap up here, not any kind of insane volume. A lot of strange volume on this day, probably some funds getting in. They're still expanding in with the US military. They're getting into healthcare. I like this. When you get around earnings, now usually I'm okay with super high PEs, but when you get around certain earnings, especially after the stock has run up to make essentially all-time highs, especially on some low volume, and you get this high PE, I get a little bit nervous just for the short term on it. So I did end up taking profits in this. People are anticipating okay earnings reports, right? They've gotten better revenue. Here, let's pull it up, actually. I can just talk about it instead of saying it nebulously. So, I mean, I guess first things first, right? Yeah, the state of Alaska boosted their holdings in Palantir. They own 370,625 shares of the company after purchasing an additional 68,945. The state of Alaska's Department of Revenue holdings in Palantir Technologies were worth $13.7 million as it stands. So it's kind of nice. You don't have a lot of insider activity to the downside, which is good. And then we're looking for an EPS in Palantir of about 0.05. Their revenue has gotten a lot better, especially doing the Maven project with the United States. And I do see a pretty good future for the company. This PE sketches me out just a little bit, again, around earnings. And I think if earnings come out, you already have a lot of Wall Street that's honestly kind of geared against this stock. You have a lot of sell positions on it. You have price targets from a lot of the large banks around that mid-20s area. So I could see any kind of earnings that aren't exceptionally stellar kind of be a driving factor to get out of this stock on the short term. You have a lot of people who are around this area, and really any of these areas, who kind of just want to take a profit. Again, when you're talking about large AI companies that have that phenomenal integrated kind of LLM interface with the rest of their stuff that also sells to the military does not want to spend money to try to pivot off what they already have, right? There's always going to be conflict, unfortunately. Even if you have vast periods of peacetime, intelligence gathering still goes on, right? And Palantir can really be at the center of that, and it looks like they're gearing up to be at the center of that. So we'll wait and see kind of what happens. I do think that if we get a major dip in Palantir after earnings, I probably will add more back because I do think on the long term, this company is going to be a standout player. So when I'm, whatever, in my 40s or mid 30s, it will have treated me very well. Let's see if there's anything else coming up. And then, of course, Thursday, you have Apple, you have Amazon, you have MasterCard, you have Merck, you have Uber, you have Shell, you have Comcast, Total Energies, ConocoPhillips, BMY, Cigna. It's definitely an interesting week. I think after the day today, I'm going to take some time and see if there's anything interesting to do some plays, at least with something like Apple. I think some interesting stuff going on with Apple. It seems like they're really leaning in to some of the healthcare things. The new AirPod Pros can act as a hearing aid feature, which is actually pretty interesting. Additionally, you have the new iMac with the M4 ARM chip, starting about $12.99. This is going to be this massive rollout of AI on personal computers, namely laptop. We saw with things like Microsoft and Qualcomm with their Snapdragon chip, that was a major source of revenue for the company, that the computer essentially has a built-in kind of native AI. That won't really be reflected, obviously, in this earnings report, but I think going forward, that's going to be a massive driver for them. Additionally, they're rolling out an update on the iPhone, free software update that's going to contain AI. And I wonder, how that's going to operate on some of the older devices, but we'll see what happens with that. We'll talk a little bit more when we get back. We have Steve Rhodes of Mastering Probability up next when we get back from the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup. You are, of course, watching the Tom O'Brien Show. Now, every Tuesday, every Monday, good Lord. This weekend was nice and long. If you come over here to TFNN.com, you can go to the newsletters tab here, and you look over here in the top right, the Mastering Probability newsletter by Steve Rhodes. Every Monday, we have Steve Rhodes on the show. Of course, he has his own show, The Trader's Edge, on at 11 a.m. Eastern Time, right here on Tiger Financial News Network. Steve, how are you doing?
Jacob?
Hi, good. How are you doing?
Good. So are you a fan of either the Dodgers or the Yankees? Or you just don't like both teams?
You know, I honestly watch more UFC than anything else, which is always a shame, I know, in conversations, but please enlighten me on what's going on. Of course, I got to rep the Rays, too.
Tonight is Game 3 in New York. The Yankees are down 2 games. The first game, which I saw after some wedding events, when Freddie Freeman, I think is his name, hit the Grand Slam home run. That was pretty cool just to see, regardless of who you were a fan of. But when we were checking out of our hotel yesterday, the Dodgers are staying there. So they were coming in as we were going out. Now, they had just played a game the night before. I'm not sure exactly what time it finished, probably close to the midnight time frame, or between 11 and 12. Drove out to the airport, had to get on a red eye, obviously their own, chartered plane or what have you, and then get in. So, so myself, I am a sports fanatic, so to speak, and I don't really have, whether it's the Yankees or the Dodgers that win, won't really matter to me too much. But what I would like to see is a Game 7. So I'm pulling for the Yankees tonight. And I don't know. I assume they play either tomorrow, their fourth game, or the next evening. But what was interesting, we were sitting at a dim sum restaurant, pretty famous dim sum restaurant down in Chinatown yesterday, and it was quite a large group of us. So I went online to my Ticketmaster account because I said, maybe I'll stay and catch the game. And I went on to Ticketmaster, and it came back with no tickets available. Which I've never seen in my entire life for any sporting event. And then somebody else found some other app, and they were able to pull up tickets, certainly much more aftermarket type tickets, and just expensive as can be. So I'm going to watch it. I'm going to watch it from my cave, so to speak, out there, just hoping for a great game. So I don't watch. What is it? UFC, UEC. What is it?
Yeah, the UFC. So like
UFC.
In my spare time, I also do boxing and jiu-jitsu, and that kind of is like, for whatever reason, that is the sport that has always spoken to me. And so watching the UFC, what boxing was to the past generations is absolutely what the UFC is to this generation.
Okay, well you won't see that in the baseball game, but I did see it yesterday in the Cowboys game. Things seem to get a little out of hand there.
That makes sense.
Point in time. Yeah. So this morning when I was doing the Trader's Edge show, there was a question that was asked about the presidential cycles and so forth. So what I had said during the show, or during that show, I said, let me try to pull together some charts for this segment here. So I was able to do that. So we're going to talk about the 4-year presidential election cycle and the impacts on the stock market, if that's okay with you.
Absolutely. Yeah, we're coming up pretty close to this election, so it's interesting to see what's going to happen here.
Absolutely. So here is and we're going to take a look at the Dow. And the reason we're taking a look at the Dow is because for the Dow, I've got 127 years worth of data. This is data provided by the folks over at Seasonex. They have great seasonal tools out there, covers most instruments, commodities, and so forth. And here, we're just simply taking a look at just the normal presidential cycle. The first one that obviously I can put, because we go back, in this case here, to 1897 is the 1900. Obviously, that's not the first presidential election, but it's the data that we've got. So we can take a look at the Dow and go back that far. And on average here, we take a look at just presidential cycles, regardless of who it is that wins or what happens in the presidential cycle year. That's where we're in right now. Major bottoms typically form between the end of May or the end of June. So let's think end of May, end of June. If we take a look at the actual stock charts, and we're going to go take a look at the center chart out here for the Dow, this is the weekly time frame. We had this year, we've seen major bottoms, I would say, April 19th. May 31st and August 9th. So we've got that May time frame in essence covered here. And the daily and weekly charts, they've got tops that are present out here, and we'll try to talk about those as well. But the monthly time frame chart, as you can see, I've got it drawn in A to B equals CD pattern to the upside. That would take us towards the 47,399 level. Now, I do believe over time we're going to get up there. The reason is because in the month of September, what the Dow did was it negated its TD9 count top, and it did that in 1 month, and that typically talks about a very strong upward momentum move that's in place out there. So that's the first thing. The second thing is if we take a look at the post-election seasonal cycle. So this says, what we're going to basically see in 2025 out here, if we're looking at that, this typically shows us that the major bottoms form in the late February timeframe. So that says, if we come into 2025, what we'd be looking for, if the market would follow this pattern, is a major bottom that form in the February timeframe, and that typically would lead to a rally that lasts through early August, declines into mid-November, and that's when the Santa Claus rally would form. That would take us higher into the end of the year. So this is what we typically see on average. Doesn't matter who won, whether it's a Democrat or it's a Republican, and this would be the first year of that new election cycle out here. If we take a look at the Dow first year of a Democratic presidential cycle out here, so I just went ahead and separated everything. What this shows that major bottoms form in late February, kind of similar to what we just looked at here. But in this case here, as you take a look at this chart, this just suggests that the market rallies for the entire year. So this would be for 2025. Now, there's only 9 actual touch points that I can use here. I did not include second terms out there, just the first term of an election year out there. If it was a second term of a Democrat or Republican, I just simply went ahead and excluded that out there.
Right.
For this, because that kind of represents a little bit of what we're looking at right now out here. Rallies. So this is 9 years worth of nine cycles that we have out here. If we take a look at the first year of a Republican presidential cycle, and this includes 1929, this is what the pattern looks like. Does not look anywhere near as good as what we were looking at previously. Again, here's the previous cycle. If you're a bull, that's what you'd like to see. But this does include 1929. If I go ahead and exclude 1929, and somebody might say, well, what about 2020? Wasn't that something to exclude? No, because 2020, we actually closed higher than we did in 2019, versus in 1929 we had a 3 or 4 year decline, I believe. So I don't consider that to be the same. So if we take a look at the exclude 1929, this is what the pattern would look like. It's still not as promising as that first year of a Democratic president out there. In this case here, this shows that typically we see a bottom in late January or February. That moves up into the sell in May type cycle. Usually it's late May, and then we get a move down into the late September timeframe before that seasonal cycle kicks in. That Santa Claus rally seasonal cycle is really what I should say. I will say this before we go to a break here. The Dow is trading at a new all-time high today, priced in yen. That's the very upper right-hand screen out here. It's really important to understand how the Dow or any product trades in all major currencies out there, because in this case here, what we have really going on, you can see prior all-time highs from about 4, 5, 6 days ago out there. When an instrument is rallying in all major currencies, that's a real bull market. We come back, let's take a look at the rest of the charts.
Yeah, fantastic. Steve, stay right there, folks. Stay right there. We're going to be right back with Steve Rhodes.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. I really want to recommend you guys checking this out. What is fantastic is this goes for all our newsletters, but you got to check out Mastering Probability. We have a 30-day money-back guarantee if for whatever reason the newsletter doesn't work out for you, but we're betting that it will. Steve also hosts the Trader's Edge at 11 a.m. Eastern Time right here on Tiger Financial News Network. See, before we went to the break, we were talking about the Dow Jones making all-time highs in the yen. Kind of thinking about what your, what that means for us over here and what else you're looking at today.
Yeah. So typically when the Dow makes a top or major top out there, it'll top out in all the currencies at the same time.
Okay.
And so the mere fact that the yen made a new all-time high today is suggesting that we don't have major top yet. Not sure that we're going to have major top, but what I thought we would do is move from the presidential cycle patterns out there and just take a look at yearly. What are the yearly patterns? And one of the tools that I've got helps us to identify consecutive years to the upside and consecutive years to the downside. In this case here on this chart, the black digits are consecutive years to the upside and the red digits are consecutive years to the downside. So for example, as I'd mentioned, I've got data that goes back into the late 1800s out here. This shows us really from 1928 forward. And from 1928 forward, so when I mentioned the crash of 1929, and I took that out of one of the presidential cycle pattern out there just to maybe even things out, that did lead to a 4-year decline out there, which then led to a 4-year rally. So again, we're taking a look at just consecutive moves higher and lower. What else can we learn out here? Well, these rectangles that we have, blue rectangles, are showing the consecutive moves to the upside, and the red or the black rectangles, consecutive moves to the downside. Those folks that have listened to the show know that sometimes we take a look at this for a daily time frame, a weekly time frame, as we're trying to understand when an instrument bottoms or tops out there. And it's very common that knee-jerk reactions to the upside or the downside are between 2 to 4 bars out there. And we can see here, you can see each of these are either 2, 3, or 4 bar moves out there. This has taken us from the 1928 time period up to 1977. What's taken place since 1977? Again, the blue rectangles here show us consecutive moves higher and consecutive moves lower. If we take a look at consecutive moves lower, since that time frame, we just have 1, 2, and 1 3-bar move. Most moves lower end up being just 1 bar, 1 year to the downside before things move to the upside. Now, as we move to the 1970 time frame, again, most of the years the upside, you can see a number of 2 bars to the upside, but then we started getting a 5-bar move, a 9-bar move. Now, that 9-bar move was the move that took us into the 2000 top. Now, that 2000 top, pretty significant. That led to a 3-bar move to the downside or a 3-year move to the downside. As I had mentioned, in 2020, we actually finished higher out here than in 2019. Yes, we had that big move to the downside, the COVID spike to the downside, the COVID crash to the downside, but it was nowhere near a 1929 event, which was the reason why I didn't take 2020 out of the picture when we were taking, or I'm sorry, 2020 out of the picture when I was doing that. If we look at if I go ahead and scrunch, well, I didn't scrunch everything. Oh, shoot. Sorry about that. Let me see. I did a chart here that scrunched everything together, I believe. Let me see. No, it didn't. Son of a gun. I guess that chart didn't post in here. But what I would suggest for you is that first, we are in year 2 of a rally. So if we come back here, take a look, we come back in the 70s, we saw that most of those rallies ended after the second year, and then they went ahead and moved lower. In those instances, we had 1 2-bar move to the downside. Most of them were just really a 1-year move to the downside out there. So that's something for us to consider as we come into this 2-year rally, because that could lead to a 1 to 3-year decline. And the question would be, well, Steve, okay, you say that, but how are we going to know? You know, my study, Jacob, of chart patterns out there, it doesn't really matter what's going on in the world, whether it's wars, whatever it might be, that these patterns that I use, that I teach to subscribers, are working all the time out there.
Yeah.
So we're going to use the patterns that help us to identify or signal tops and bottoms. We're going to use, which basically those are, for my subscribers and my trading, they're for their TD9 counts, their Rhodes Momentum Indicator patterns, their wave number 7, a portion of the Chapman wave out there, and then the A to B equals CD patterns. And here again on the Dow on a monthly time frame, this is suggesting that over time, not tomorrow, not next week, but over time we should get up to the 47,400 area. That's its A to B equals CD pattern to the upside out there. To identify support and resistance, we're going to use profile levels. We're going to use TD9 count breakout and breakdown levels. For example, if you take a look at the Dow Equity Future contract, that formed a TD9 count top half a dozen days ago or so, and that took price right back to where it had broken out from, and that's at 42,254. Now, when you pull back to a breakout level, even though we might not see what I would say a pattern per se, but when you pull back to a breakout level, that in fact can be a buying opportunity. And so we can see that maybe people on Friday, when they saw the Dow moving lower, this is a Dow Equity Future contract, by the way, that we're taking a look at out here, that the market was just getting ready to move lower out there. And it found support at a TD9 count breakout. So that's a pattern that everybody should really use and learn. I would expect or anticipate that we're going to have at least a two-day rally, maybe a 2 to 4 day rally. So we're just going to simply have to monitor this one day at a time out there. And that's what we're going to use to help us identify as we go into 2025 out there. We're going to be aware of the election cycles and patterns that typically form there. And we'll see the patterns unfold at that same time. So that's how we'll know what 2025 is going to look like.
Steve, fantastic. Such unique and thorough analysis every time. That's why I love coming on here on Mondays and kind of hearing that stuff, right? I mean, you take all these large data sets, collate it into something that we can kind of understand here and then develop some kind of actionable plan for it. Steve, thank you so much again. Are you looking at Palantir too, huh?
Well, I was going to go ahead and give you a little dessert.
I would like to, yes.
Before we sign up, okay? So if we take a look at Palantir, if you're looking at the monthly time frame chart out here, this formed a TD9 count top back in August of 2024. It took that out immediately the following month. When you take out a TD9 count immediately, it tells you about a strong upward momentum move. Now, this was already in a strong upward momentum move, but this is suggesting that that should continue. If we look at the weekly time frame chart, this negated its TD9 count top. It did it in 2 months' time. It did it on a weekly basis last week. So last week negated that signal, says we're going to move higher, trading above resistance levels. And we look at the daily time frame. The daily time frame on Friday negated its Rhodes Momentum Indicator top and TD9 count pattern. And what those patterns do is they simply, when you get those tops, all that it really suggests is a move back to support. Well, if we take a look at Palantir on a daily basis, it moved back to 4102. That level held the support. Now we're trading above profile resistance and its TD9 count top. Even the daily suggests that we move higher. This suggests that maybe we get a short-term top between Wednesday and Friday. When are they coming out with earnings? Was it tomorrow or the
next Monday, November 4th?
Oh, next Monday. So it could be in time when they come out next Monday for a short-term top. But we'll have to come back and look at it. So I just wanted to give you a little dessert for your favorite stuff.
Thank you so much for that, Steve. You know I love talking about Palantir. We'll see you tomorrow morning, 11 a.m. All right, Steve?
You bet. Take care. Thanks.
Take care. Folks, stay right there. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching The Tom O'Brien Show. I was just joined by Steve Rhodes, the author of the Mastering Probability newsletter and the host of The Trader's Edge on 11 a.m. Eastern Time right here on Tiger Financial News Network. If you want to go back and listen to that or kind of just go over what we were talking about, you can do so at the end of the day. Our producer always cuts these clips. He is always hard at work trying to give you the best content that we can. You go ahead and while you do that, make sure to give that video a like and our channel a subscribe because it helps us all out immensely. And again, that's why I love having Steve on, right? He just... being able to gather all of that data and put it into something that you can digest easily and then develop something on it is just fantastic. So again, check him out tomorrow morning at 11 a.m. Eastern Time for the morning market kickoff, for the Trader's Edge. Take a look at Oklo right now. This is pretty nuts, right? You're up 26.58%. This is Sam Altman's company. It doesn't seem like there's anything that necessarily happened today that would have driven that. Again, my whole thing right now with nuclears, it is going to be news-driven, really headline-driven in the sense that a new company is going to start using nuclear. Of course, Oklo does SMR fast reactors. They actually don't do that at all. They haven't built anything yet, but this is what they are suggesting to build. I was taking a look at UEC too. Let me see here. Okay, so up 3.3% today. It seems like it is finding support kind of around that breakout level a little bit higher. On low volume, I can kind of see some consolidation happening here. Now, this I can get a little bit nervous about if we shoot right back up to the highs on no volume. You got to look for that. If we consolidate for a while on some low volume, maybe through the next few days, this is where I'd ideally want to add. I was thinking about doing it on Friday, but I was on the show and didn't want to do anything during the break like that. But yeah, we're up 3.4% today. This doesn't show any signs really of slowing down. And honestly, there is some news articles about the whole thing, but it doesn't seem in the sense where like it's topping in a major way. The Oklo I do get suspect about just at this price point and moving up 26.69, but it is on pretty okay volume, I mean, you have bigger volume coming down on it, which could suggest you pull back a little bit on Oklo. But this is where it starts getting kind of volatile for me, and I step out for something like that. But again, you've heard my spiel before. the uranium suppliers, I think, are always going to win regardless of what kind of reactor type gets released. So I'm going to kind of look for the next few days on low volume consolidation here. I don't want to see any movement back up to the highs on low volume because that suggests we're going to come kind of back down and test that consolidation level. But that's kind of what I'm looking out for right now in UEC. Oh, yeah. Intel. Intel's coming out with earnings, I believe, Wednesday. Give me a second to get that right. I'll have it when we get back from the break, which day that's coming out with earnings. They're going to have some problems. I really think so. The new chips didn't go out entirely well. They got that $3 billion from the DoD, but apparently it hasn't come in yet, which is a little bit strange. They invested $300 million. This is released today. $300 million in China chip packaging and a testing plant, aiming to expand an existing chip packaging and testing facility in China. That's going to be in Chengdu. It's committed to the mainland market despite a recent call by Beijing-backed cybersecurity group to review the company's products. I don't know how this fits in with the push from the U.S. to stop getting these chips into China. It's actually kind of an interesting thing. I guess it's a separate unit, but in my opinion, I think that's a little bit too close for comfort. And I do believe, okay, so it's interesting, right? You're gonna have earnings. These guys are gonna get shot on earnings. It might be even worse than people are anticipating. Their new CPUs really aren't anything special. It's not even a next gen. So, there's nothing on the horizon that looks super attractive. So you'd say, okay, that's somewhat of a bearish signal, right? I mean, it's definitely a bearish signal. Qualcomm isn't going on right now, pursuing any further kind of things with Intel. They're going to wait till after the election to see what the kind of environment is going to be. We also know that Intel is not having successful and market volume yields on some of these Qualcomm chips, which is a massive issue. So then I was kind of musing the idea of, perhaps Intel getting purchased out by something, right? Which would be positive for the stock of the company. And I could definitely see this happening, probably not soon, but you need, maybe another year and a half of, poor performance until that becomes a thing. But it seems that Apple and Samsung are considering buying Intel. According to recent reports, they're considering an acquisition, which could have a significant impact on the iPhone market. Of course, uses 3nm chipsets. Today, that's the smartphones. Apple acquiring that could help them more easily, essentially develop their own in-house kind of chips there, which would be kind of interesting to see. But that doesn't give me right now any reason to get into it. That seems like nothing super concrete. I really would not go long into earnings here. Yeah. I mean, you already saw with in the recent past, even earlier this month, I mean, you had people coming out saying that Intel deliberately misled them on how the company was doing. And this kind of charade falls all at once. So anyways, they're up 1% right now. And just not a lot happening in that. Let's talk a little bit about ON Semiconductors. They're big in the EV space. They had their earnings come out, up 1.56 right now. Massive bar for the day. Let's take a look. Revenue decline of 19.2% year on year to 1.76 billion, beating the analyst consensus estimate of 1.75. Adjusted EPS of 99 cents versus 97. The revenue from Power Solutions Group, PSG, declined 23% year over year to 829 million. The AMG decreased 16% year over year to 653, and the ISG Intelligence Sensing Group, that fell 15% year over year. Adjusted gross margin declined by 180 basis points, generated 293.6 million in free cash flow, and held 2.77 billion in cash and equivalents as of September 27th. So the CEO Al Khoury said, as power demand continues to rise across our key markets, the need for greater efficiency becomes paramount. we are investing to win across the entire power spectrum to ensure that onsemi is best positioned to gain share in automotive, industrial, and AI data centers. And it was taking a look at their website, and it seems like, the sensor group even coming down kind of makes sense as well. This pops up even more if you can get into things, like Waymo or automated driving. It seems like it'll probably be used by other companies, mainly auto manufacturers who don't have this technology or research natively occurring. So we'll kind of see what happens with onsemi from there. But the EV market itself is kind of going through some doldrums right now. So, this is a point to get in? Probably not. Folks, stay right there. We'll be right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jacob Schuppe, you're watching the Tom O'Brien Show. We just have a short segment. That's fine. I had a lot I wanted to talk about today, but we're going to save that for tomorrow and Wednesday as well. I'm taking a look at Chegg. Someone had actually asked me about this a little while ago. And if you're not familiar with what Chegg is if you were in college in the past 5 years, you definitely know what Chegg is. It essentially helps you with homework, meaning that it just has the answers and all of that. Of course, if you're going to be a good student, you don't want to do that. You need to use it to learn. But we all know how young people can be. Trading up 6.25% right now, 170. I guess in that capacity, these kind of penny things can be somewhat interesting. Long term, so this is really unique, right? Financially, their books look insane, right? Their total assets are about 1.1 billion compared to a total liabilities of 748 million, which is super nice. Cash and cash equivalents of about 133 million. I wonder where they're getting most of their getting most of it from that, and then short-term investments as well. They have a lot in long-term investments, right, which is adding to assets. So at least in the short term, it's not that it's not good or anything like that. But they have these long-term investments essentially, right? Their assets are a lot nicer than their total liabilities. Of course, you balance out with their common stock. Even with that good amount of cash on hand, good amount of short-term assets on hand, this company's in for a world of hurt the better that these LLMs get, right? So ChatGPT is now obviously taking over what the region that Chegg used to rule, right? And there really was no other player in the game. ChatGPT is still not good at somewhat higher levels of kind of thought or problem solving. That's where Chegg is kind of winning right now, but it's like you're pushing the king and his men deeper into the keep, right? And I don't think in the long term this is good for Chegg in any capacity, even when it has really solid financials like that. Folks, thank you so much for joining me today. We'll be back on tomorrow morning at 9 a.m. with Tommy O'Brien for the Morning Market Kickoff. We'll see you then.